welcome back to the Iraqi Dinar Hub, everyone. I hope you're all doing well and maintaining a positive outlook. Today, we have some significant updates on the Iraqi Dinar that might completely change your perspective on this investment. But before we dive into that, let's talk about something fascinating that has been making headlines. Iraq is once again in the spotlight, this time for holding one of the largest gold reserves among Arab nations, boasting an impressive 162 tons of gold. This is a major financial asset, and Iraq is making sure the world recognizes just how robust their foreign currency reserves are. The message they are sending is clear. Iraq is not merely surviving but thriving, positioning itself as one of the few financially stable nations, not one drowning in debt but rather a creditor nation. This is an important statement they are putting forth as they continue laying the foundation for a potential shift in their currency's value. So, what does this mean for those holding Iraqi dinars? When the value increases, the next step would be to visit a bank or an exchange center where you would need to convert your dinars into US dollars and deposit the funds into an American bank. Some of you have mentioned that you hold around 2 million dinars and are contemplating whether to cash in half while holding on to the rest in hopes of further appreciation. Is this a wise approach? Let's explore this idea further. Have you ever found yourself in a situation where you're holding an investment, uncertain whether to sell and move on? Perhaps the returns haven't met your expectations, or it's simply taking longer than anticipated. It's completely understandable being patient with investments can be incredibly challenging, especially when your financial future is on the line. The dilemma many are facing right now is whether to cash in their dinars or wait for a potential increase in value. The Iraqi dinar has been a highly debated topic for years, with speculation that it could soar to $2, $3, or even $4 per dinar. However, for those who have been waiting for an extended period with little to no movement, the uncertainty can be overwhelming. Holding on to the dinar with hopes of appreciation seems logical when considering the potential upside, but what about the opportunities being missed elsewhere? There are numerous investment options currently performing well, such as the stock market, which, despite its fluctuations, offers consistent growth potential. Cryptocurrency, though unpredictable, has yielded substantial gains for some investors. If you wait for the dinar to appreciate, you could be missing out on other lucrative ventures. Let's consider a different approach. What if you cashed out your dinars today and reinvested the proceeds into a solid mutual fund with a strong track record? Even a 10% return within a year could prove to be a substantial gain. Meanwhile, holding on to the dinar indefinitely could mean missing out on steady returns from other financial opportunities. Continuously monitoring dinar-related news, hoping for a sudden surge in value, can be exhausting and stressful, especially when nothing seems to change. This raises an important question. Is it more beneficial to cling to an investment that may take years to appreciate, or would it be wiser to take control of your financial future by reallocating your resources to investments that are currently performing well? By diversifying your investments, you mitigate risk and increase the likelihood of consistent growth. It's not solely about the dinars, about strategic financial planning and weighing the risks and benefits of various opportunities. Now, shifting our focus to exchange rates and Iraq's economic structure, a critical factor to consider is the real effective exchange rate (REA). This metric evaluates a currency's value relative to a basket of other currencies, adjusted for inflation and trade conditions. Presently, Iraq operates under a fixed exchange rate system, meaning the dinar is pegged to the US dollar. While this system offers stability, it also comes with drawbacks. A country adhering to a fixed exchange rate may struggle with inflation and economic shocks. So why hasn't Iraq transitioned to a more flexible exchange rate? One primary reason is political instability. Decades of turbulence have made it difficult for Iraq to introduce major financial reforms. Stability is essential for attracting foreign investors, and without it, moving towards a floating exchange rate remains a challenge. Another crucial factor is Iraq's heavy reliance on oil exports. Fluctuations in oil prices directly impact the dinar's value, and maintaining a fixed exchange rate helps shield the economy from abrupt shocks. However, this approach can also hinder long-term economic growth. Looking at the foreign exchange market forks, a country needs a freely traded currency to fully participate. Iraq's current system restricts its ability to engage in the global forex market, limiting the dinar's international recognition and use in trade. Consequently, businesses in neighboring countries prefer dealing with more stable currencies, creating barriers for Iraqi enterprises seeking expansion. On an individual level, the limitations of Iraq's exchange rate system present challenges for everyday citizens. Traveling abroad or conducting international transactions can be difficult due to the restricted exchangeability of the dinar. Additionally, Iraqi importers and exporters face uncertainties that contribute to increased costs of goods and services, affecting the entire economy. So, what steps can Iraq take to address these challenges? First, the country must prioritize political stability and rebuild confidence in its financial system. Second, economic diversification is crucially. Iraq needs to expand beyond oil dependency by investing in sectors like agriculture, technology, and manufacturing. A diversified economy would create a stronger foundation for a flexible exchange rate in the future. Lastly, promoting financial literacy and public education on currency exchange mechanisms is essential. When people understand the financial system, they can make informed decisions and better navigate economic fluctuations. In conclusion, while Iraq has yet to shift to a flexible exchange rate, the consequences of its current system extend far and wide. Political stability, economic diversification, and financial education are key elements for progress. Now, I'd love to hear your thoughts. Are you still committed to holding on to your dinars, or are you considering diversifying into other investment opportunities? Share your opinions in the comments below. If you found this discussion valuable, don't forget to hit the like button and share this video with others in the same boat. Subscribe for more insights on smart investing and financial strategies. Your journey to financial freedom starts with making informed decisions today.